But once again, the gains today, very modest indeed, only up about 0.1% here on the day. And then the Russell 2000 really just can't get out of its own way. Another down day for that major index, down more than 1% here on the day.
Yeah, take a look at the S&P 500, 229 names to the upside, Scarlett, 272 to the downside. So not quite an even split, but close to it and 2 unchanged.
All right, let's take a look at how the sector performed on the day. You have software and services leading the way, up 0.8%, followed by commercial and professional services, and REITs bringing up the rear there in terms of the top 3 best performing groups. On the downside, energy stocks taking a hit once again as crude oil prices fall below $75. WTI now below 75. It's now down 18% since late September. You also have food and staples, some defensive sectors, and utilities off by 0.75%.
All right, real quickly as we wait for earnings, guys. Take-Two Interactive, as I mentioned, among the top gainers in the S&P 500, up about 5.2% in today's session. We know the news. We're all the company Rockstar Games, I should say. It's a division of Take-Two. They're going to begin promoting the next version of Grand Theft Auto next month. So some excitement over that.
And it's hard to understand to state just how big of a deal this is.
Well,
I mean, this is basically the most popular. I mean, if you exclude Minecraft, it's basically the most popular game out there.
185 million copies sold of the previous version.
Yeah.
You're right. It's the second best-selling video game. So it's massive, right, in terms of how it can move the needle. Eli Lilly, its own weight loss drug, they introduced. That stock was up about 3.2%. It was a diabetes drug. They've got their
Zepbound. That's what they named it.
I know.
Zepbound.
I don't.
Why and how did they come up with that?
I actually don't think it's that bad.
They paid consultants a lot of money to come up with that. Zepbound.
I can think of some better ideas, but
all right. So Eli Lilly mentioned, and real quickly, GoPro. I know it's a small market cap, but nonetheless, rallying about 18%. It's a $3 stock, guys. It's way down from when it was 90 back in 2014. But nonetheless, reported third quarter results that beat expectations.
Before we get to some of the decliners here, we're getting some earnings out of ARM. Remember, of course, one of the new kids on the block. First earnings report since they went public here. Their fiscal numbers here on adjusted EPS basis looks like a pretty big beat. 36 cents versus 26 cents. And as far as revenue, also a significant beat there. $806 million in the quarter versus street estimates for roughly about $747 million in the quarter here. Their forecast going forward also looks like it's going to be coming in slightly above analyst estimates, at least at the top end of that range. The company also saying, I think this is interesting, that in the most recent quarter, the number of chips that they shipped was down 6% year over year. So not necessarily the strongest report since they became public, but not a huge disappointment either.
Yeah, second quarter chips reported shipped 7.1 billion, down 6% year over year, Scarlett. Second quarter adjusted EPS coming in above estimates, 36 cents. Sees fiscal year adjusted EPS from $1 to $1.10. Shares bouncing around in the after hours, but pretty much flat right now, down 0.2%.
All right, and of course, we'll continue to monitor what other earnings are coming out. That stock extending its losses a little bit here, but definitely bouncing around, as you mentioned. I'm definitely looking ahead to Take-Two. I'm looking ahead to Disney. In the meantime, Disney not doing a whole lot as we wait for these results. Tim, what decliners you have?
Let's talk about some decliners. I want to talk Warner Brothers Discovery. It's actually having its worst day on record. The company hasn't been, in this iteration of it, hasn't been publicly traded for too long, but down 19% as we speak. The company reporting after they reported a significant decline in network advertising and said the market may remain challenged next year. eBay shares also taking a hit today. Shares finishing the day down about 2-3% as we speak, 2%.
I'm the company fascinated by this company. Is it
the eBay one?
Yeah, what do you buy? If it's just collectibles and car parts? I mean, or is there something broader going on?
There's something broader going on. They're trying to compete with the likes of Walmart and Amazon, and the bleak holiday forecast indicated to investors, at least, that they're not doing a very good job competing with Amazon and Walmart. So that's the concern here. But I think you're right. It's sort of seen as this auction site that for years was where you would find collectibles like trading cards and things that were kind of hard to get, and you'd bid on them. But they're trying to broaden out. The company, as I mentioned, is struggling as it loses shoppers to Amazon and Walmart, especially in this holiday quarter. And then finally, let's talk Robinhood. Shares of Robinhood falling the most in nearly a year. Finished the day down by more than 14%. The company reported results for its most recent quarter, fell short of estimates. Revenue came in below estimates. Monthly active users came in below estimates. Piper Sandler ended up cutting the price target. Let's get to Disney, because that's just crossing the wire now, Roman.
Yeah, Disney crossing the wire here. The headline number for the quarter is that Disney Plus subscribers for 4Q, 150.2 million. The street was looking for 147 and change here. So that looks like it is going to be a beat here on the fiscal streaming, the fiscal year streaming numbers, quarters, I should say here. But let's go on to this other idea here that they say that they're on track to achieve $7.5 billion in cost savings. This is a big deal because previously they had said they were looking at about $5.5 billion. So two of the big metrics, guys, that we were really looking out for were how are they going to do on subscriber growth? We're going to see a return to growth. We got that. And how are we going to see on costs and cost savings? And we also got that as well.
Well, there's a couple of things in the press release I want to get to. The company's saying that they can continue to expect that their combined streaming businesses will reach profitability in the fourth quarter of fiscal year 24, although progress may not look linear from quarter to quarter. You mentioned cost. We continue to aggressively manage our cost base and have increased our annualized efficiency target to $7.5 billion versus $5.5 billion previously. So they are definitely on an aggressive cost containment campaign, if you will, Scarlett.
Yeah, I'm looking at the sports business because this is the first time that Disney is breaking out the financials for its sports business. It's not clear why. We do know that Iger is looking for a partner or an investor in ESPN. They own the majority of it. Hearst owns another 20% of it. But in terms of sports revenue, $3.91 billion was the reported number. Consensus estimate was for $3.89 billion. And for ESPN Plus, the subscribers coming in a little bit less than what analysts had anticipated, 26 million even. Analysts were looking for 26.3 million. Disney wants to turn ESPN into a digital product, and I'm not sure how that meshes with ESPN Plus.
Yeah, well, they gotta get out some of those carriage contracts. I mean, we were talking with Michael Wolff at Activate earlier, and he actually talked about that. I guess they still are getting a lot of fees out of the cable companies, and that makes up for, I guess, whatever deficiency they have in not being able to put some of that content on a streaming platform. But at some point, they've got to reconcile that. The fact of the matter is, we're just not watching this stuff on cable anymore.
Exactly, and that's part of the issue is, there are now so many more places to get this content. You have Amazon bidding for this stuff. You have Apple potentially bidding for this stuff, right? You have all these OTT services and platforms that didn't exist when ESPN was the place to go to watch this stuff. I mean, Fox as well, but, there's so much more competition out there that it's harder and harder to get this stuff on the cheap.
All right, guys, we've got Disney up about 1.5%. Take-Two, though, on the downside, still sees their fiscal year net bookings $5.45 billion to $5.55 billion. So we're just starting to get some headlines. So we'll continue to track that. I know you guys will as well. All right, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, and, of course, Bloomberg Originals. We will see you again, same time, same place tomorrow.